Hi there. Thank you so much for joining us once again here on Leading Edge. I'm your host, Jeff Smith. Coming up in just a few minutes, how do you define your organization? How do you create, build, or maintain organization in your life, in your business, in your routine? We're going to hear from a man whose life mission is getting that out of you and out of those with whom you surround yourself. That's coming up in just a bit. But first, we're going to spend the first couple of segments talking dollars and cents. Cents, S-E-N-S-E. Because honestly, I don't have an answer for it. And day in and day out, I don't know what to believe when we report differing things all the time. How are we to read what we're being told at, it seems, every hour of the day? The economy's bad, the economy's good. The economy's strong. The economy is the weakest it has ever been. Is it black and white? Is there some gray in there on how we read things? Let me show you what I'm talking about. I want you to take a look at this chart from the Bureau of Labor Statistics. And what it lists is between February of 2020 and July of 2024, the increases in some of those typical household items we have seen. The cost of eggs up almost 60%. And I was telling our guests, I looked at other fats, oils, and in that category as well is peanut butter. And I noticed that especially because I eat a ton of that stuff. Crunchy, in fact. I wanted to point that out. But it has gone up 46.7%. Car repair up. You know as well, I'm sure they're at home, all the prices that you were paying when it comes to car insurance. So, to dive into this, to talk a little bit about the costs that we are seeing, I wanted to dive as well into inflation, what it means, and then with Alan Lancz here from Lancz Global joining us, I wanted to talk a little bit about the stock market, retirement accounts, and where those stand. So, first and foremost, good to see you. Thanks for being here.
Thanks.
You looked at that chart. Makes sense to you? Is that what people are sensing? Do you think they even digest that on a daily basis, that that is reality?
Well, I think some people are seeing it because food is such a big item, right? That's going to affect Americans every day. You've got, fuel that's going to affect a lot of people. Even the numbers that you're showing are understated in some categories. Like the CPI only covers rental. It doesn't cover home ownership. And if you think just last month, the average home price went up 4.3%. Mm-hmm. That's month to month. So that's a 40% increase a year if it kept that pace. That's where really people feel it. So who's going to feel it the most? Food, energy, everybody. But on the home prices, it's going to be the first-time home buyer. And that's why you're not seeing, the average American, the younger generation being able to buy homes and have that, as far as luxury that we had. Yeah. And that's a challenge, and that's why people feel like their dollar's not being stretched, and it's not covering what it used to be, and that's why you have that dichotomy of are things good or are things bad?
I feel like this period in our history, in our lifetime, has really forced us to be students, if you will, of the past, right? Because you look back on the 70s. What did we really experience then? What did we really experience in the 80s? Is this similar to the 90s when there were slowdowns? When you've looked back on these patterns and what we're seeing, and I think this leads us into a conversation about inflation, but when you've looked back, are there comparisons?
Oh yeah, the last 3 years, there's nothing close except for the late 70s. And that was like one of the worst times except for the early 1900s. So we're really experiencing an incredibly bad time for the average American. And I think you've got a political situation, so again, you're trying to spin something positive, and then you have the reality, and we'll see, what happens.
But I do want to point out, it's being spun on both sides. And
definitely.
I think that's why I said what I did. Mm. Is it right? Is it wrong? Is it up? Is it down?
And it's the way you look at it, right? Yeah. It's what you're looking at, et cetera. But really, the inflationary numbers are the worst since the 70s. Interest rates should come down. They've already started to come down in the second half, as we talked about the last time we got together. So that's going to be a positive. That'll help even the home ownership, where you can the affordability aspect and what have you. So it's not a doom and gloom type situation, but we got to do some of the right things. There's a fine balance between lowering interest rates, not too much where it creates even more inflation.
Right.
That's that fine line that hopefully the Fed and politically we're able to reach.
And I know we're talking about into September, and we're getting close to our first break, I know, but in September they were talking about the Fed doing another rate adjustment. I think one of the things you and I talked about, and I want to touch on it before we go to our first break, Alan, is talking about the fact that compounded interest and how that affects things. Because while the narrative can be on both sides of the political aisle that inflation is coming down to 3%, down to 2%, it doesn't affect prices because of all the inflation that came before it. Am I understanding that correct?
Oh, definitely. And that's, I think, where you have a little misunderstanding from a standpoint of the average American, but they're hearing that inflation is going down. It's not going down. The high prices that you had on in the beginning of the show, they're actually increasing another 2, 3, 4%. On top of those incredible increases that we had, the 20%, et cetera. So it's not coming down, it's just increasing at a less rapid rate.
I think the one thing we have not answered clearly, maybe for you there at home, where you've got to touch on the why. Why is all this happening? Stay with us. We're going to talk about that. I also want to dive into your retirement account, your 401ks, the stock market, where that sits going forward, especially into the final quarter of 2024. We'll be back right after this. Once again, glad to have you here with us on Leading Edge. I'm your host, Jeff Smith. Alan Lancz joining us. And Alan, as we talk more as far as people's money out there and what they're noticing, how far their dollar is going, I said maybe we're doing a poor job of answering why all this is happening. Why are we seeing, because I think during the pandemic, we talked so much about supply chain issues, how the job loss was tied into the global pandemic, something of which we had never experienced. And now that we have such distance from that moment in time, why we are still kind of, the ripple effects are still out there, are they not?
Yeah, it's been incredibly volatile, and I expect that to continue the second half. And a lot of it's just momentum-led investing, like 7 stocks have led the last couple of years, mainly in the tech arena, fueled by AI. And that's been a positive situation. I think AI is good long run. We've talked about that for several years. The problem is the momentum is fed so much now that you have these trillion-dollar companies. They're not going to grow at the same rate once you're $2-3 trillion. And because of that, you have a lot of money concentrated in a small area. So when they want to get out, the prices collapse. That's what we saw the first week of August. Actually went down so much where we actually started buying after taking profits earlier in the summer when prices were high. And now, as far as this week now, we're looking at prices pretty close to where they were in the first week of August. So you've got these extremes. It's more concentrated where before it was like a year or two to see such fluctuations. Now it's a matter of weeks.
I was telling you in the break, I said, you talk to your financial planner if you have somebody helping you with your 401k and you hear about these, okay, a little more risk here, we're going to be a little more conservative here. You said those fluctuations the last few weeks have been something that is atypical. Very strange situation. It just really condensed where, like I said, normally it's several quarters. So I think what you do is the same thing. When you see panic selling like the first week of August, look for some good quality companies that you can buy cheaply. And when things start rolling and you get this momentum led about people bragging how much money they're making in NVIDIA or whatever, just take a little bit of money off the table. I mean, you don't have to sell it all, but for the NVIDIA we sold at 130, 140. When it went down under 100 in the first week of August, we just bought more. In a retirement account, you don't pay taxes, so it's a good situation. But you got to be nimble and not be emotionally led. You want to be a proactive investor, not a reactive. Oh, prices are going down, I got to bail out. And most investors are becoming reactive, where they're jumping on the bandwagon when things go up, and then they bail out any price when things are going down. This goes back to the old Wayne Gretzky statement. You go to where the puck is going, not where it has been, right?
Yeah, exactly.
How often you bring out the Lancz letter?
It's every 3 weeks.
Okay, every 3 weeks. And I wanted to take from the August 7th issue and just read something that you put in here. The importance of both understanding and mitigating one's risk levels has never been more critical, particularly during these periods of overconcentrations and momentum-led investing. Another thing, you've got a chart on here where you talk about the loss from panic selling when we started to see this drop off in the beginning stages of August. And you've got 9-10% from people who freaked out when Apple started moving up and down. Same thing with Amazon, same thing with Meta, of course, the parent company of Facebook, and Tesla, and it goes on and on.
Yeah. Yeah, and the interesting thing is 2 days later, if you wouldn't have panicked out that day, if you would have waited 2 days, you would have
The
been
numbers
up.
plus.
Yeah, you'd have been up. So that's what I mean by letting emotion drive. And I learned that from my mentor, Sir John Templeton. So whenever you see emotion, when you see panic in the streets, blood on the streets, that's when you want to really be buying. And the same thing, when people are euphoric, that's when you got to say, hey, I'm not that smart. Let's take some profits. Got kind of lucky that we got such gains that we have.
You and I have known each other a long time, and I always tell people when I see the Dow Jones Industrial Average and when we show that during the newscast, I say that's a subjective number, and it's really just kind of fodder for the eyeballs each and every day, because the Dow is a collection of 30 companies that don't necessarily tell us what's really, really happening in the U.S., correct?
Yeah, even the S&P 500, which is over 500 companies, aren't a good representation anymore as far as because those big companies are such a big part of that index. So if you're in the S&P 500 in your retirement plan, you're taking a lot more risk, you have a lot more tech than you would have 10 years ago because of these companies being so big. And that's what investors should realize in all this, that if you have the S&P 500, it's not a good broad representation because it's a weighted index, and you really should diversify just away from that unless you want that tech exposure.
Meaning you should have more of the Dow, you should have more of the NASDAQ. What are you pointing people toward?
Other areas,
Okay.
there's ETFs that are lower costs and that you can get into certain sectors, maybe buying some things that haven't done as well that produce income, as far as financials, as interest rates go down, financials will do better. They haven't done that well. Healthcare, besides Eli Lilly and a couple other companies, has done really poorly. So that's another area that you can be selective and buy some good growing companies that have a good dividend. Those, I think, will be the better areas to invest in with lesser risk than trying to jump on and chase NVIDIA or any of these, high-flying, they call them the Magnificent Seven type stocks.
Let me ask you in our final minute here, once again with Alan Lancz, talk to me a little bit about if the Fed does go ahead and drop interest rates, which it is expected to do up to a half point, could be at this point we're hearing, obviously heading into November with the election. What are you, bring out the crystal ball, Alan, what are you seeing?
Well, the interesting thing is, we've been avoiding bonds for 4 years now, and bonds have underperformed. Well, in a lower interest rate environment, bonds will do better. So this is one of the first times where, we locked in at 5, 6, 7%, for 5, 10 years, because that's not a bad return safely to have. While before 2 years ago, you're getting 2 or 3%. So interest rates go down, you lock in at 5, 6 on a guaranteed even, then you're looking pretty good. So this is one of the few times that somebody with 60% stocks, 40% bonds can actually do well, while that whole scenario of 60-40, having that much in bonds, has been a disaster for investors.
Alan Lancz, once again, where do people find you if they go online?
So Lancz Global is our research.
Lancz.
Exactly. And basically, we're in Toledo, so no problem as far as in talking and analyzing your portfolio and doing whatever we can to make sure you're meeting your goals and objectives.
Wonderful. Alan, thank you for taking the time. We appreciate it. I know the viewers appreciate it as well. We'll be back right after this with more on Leading Edge. Welcome back here on Leading Edge. I told my next guest that after talking with him at lunch the other day, I felt like we were kindred spirits. So much of what he teaches and how he trains his clients reflects the lessons that I learned growing up. Passion, purpose, self-awareness, self-reflection, also self-regulation. Now, these are virtues, these are ideals, but these are also the foundations of something. Joining me for some serious inspiration here today is Dr. Marvin Whitfield. I know a lot of you know him. He is, of course, the CEO of Big Brothers Big Sisters of Northwest Ohio, but also the founder and CEO of Blue Force Mobile Training Team, which I wanted to dive into that a little bit today, just because of the lessons. First and foremost, great to see you. Thanks for coming in.
Thank you for having me here, Jeff.
Absolutely. Let's talk about the training that you are giving to these, I would say just first responders comes to mind as some of the clientele, but not the only clientele.
Yes. So before we start the conversation, since we're keeping it organic, I'm going to ask you a question.
Okay.
Do you like Spider-Man?
Not my favorite superhero, but sure, why not? I'll play
I
along.
thought it was Kindred Spirits. Okay. So in one of the,
that's where you were going with this.
So in one of the scenes, right before his uncle, who was raised in Peter Parker, before he was killed.
Can I finish the line? I know where this is going.
Yeah. He made a statement.
With great power comes great
responsibility.
Absolutely.
Right? And that's my concept when it comes to training. Knowledge is power. If you can give a person knowledge, you empower them to do things they can never even dream of.
Mm-hmm.
And throughout my whole career, I stayed in a space of training and just kind of evolved in that space. And that's just my purpose and passion in life now.
Talk a little bit about the clients that come to you, what they are seeking, and how you kind of tailor, how you build this program for them, because I'm sure you have to identify the things, their needs, their wants, but definitely their must-haves.
Yes. The concept I use for the training is a concept I learned while working on the United States Army Intelligence contract, where I had to go do training, basic, intermediate, and advanced levels of training with the military.
And I guess give our viewers, I don't want to get the cart ahead of the horse.
Yes.
You are contacted because these people want to do what? What are they lacking?
Training. I specialize in the area of leadership development training, cultural competency training, implicit bias training, and trauma-informed training.
Okay.
And also basic life support training.
Okay.
And so usually clients reach out and ask about the services, check out my credentialing, and then I do an assessment because I custom design all of my training to fit the needs of that organization or particular individual.
And you go in and how do you, I guess, build this program so that you are hitting on all the things that at the end of the day, at the end of the time that you spend with them, you know that they are on a better path?
Okay, it depends on what space of training we're referring to, but I use the model of lecture, lab, and scenario. In other words, I'm going to teach you the theory and concept in the area you want to grow in. Then I'm going to put you in a controlled environment where we do a couple exercises to where I walk you through each process. And then I give you a full-blown scenario that actually relates to your course of work. Let's say, for instance, you're in journalism, and you say, well, I want to enhance this area. And so I'll do my research, I'll bring up my expertise and experience, and actually design additional information to add to your portfolio of knowledge. And to teach you the theory and concept. Because once you learn the theory and concept of anything, now you know how it works. Now you know how to build upon that space. And then we'll do work labs together to you actually grasp the theory and concept and can apply it. And then I give you several scenarios where you have to problem solve. I don't believe in spoon feeding. I want to be able to see that you actually understand the process and you can go implement it.
Like any good history teacher, you have the students read the book, but then you want them to apply that.
Exactly.
Right? So you and I had a conversation. We talked about the generational gap that exists. So when you have, let's say, students in your training who are at a certain level, and then you've got those who, like you and me, a little older in our years, and maybe learn some different things from our parents. How do you deal with that?
So,
and do you recognize it?
Yeah, so one of the biggest things a lot of my clients and a lot of companies and businesses and actually departments and agencies are requesting is diversity training within different cultures being different age groups, cross-generational training, for for lack of words.
Yeah.
Fun fact, so the last time we spoke, we were still in the space of 5 generations in workspace. The only workspace now that we're seeing that continuous 5 is in politics, because we do have some in their late 70s that are still in the workforce. And so, but statistically right now, we're moving towards that 4 different generations in one workspace. And a lot of challenges a lot of these businesses and organizations are facing is you have senior leaders trying to communicate to the junior leaders and the newcomers. And they all communicate differently, they all work totally differently. And we start to see a turnover rate. And so we say in the leadership world, people don't leave good jobs, they leave bad leaders. And so a lot of these organizations and businesses are trying to do a stop loss. Okay, how can we take and build bridges between these generations? Because everybody have their own cultural beliefs on how they was raised and how they see the workforce, how they see the world.
And this was one of those questions I had for you. I said, if you're an older leader and you're a younger worker, where do you meet in the middle? Whose responsibility is it to assimilate to the times, for lack of a better phrase.
Yes, so my process in the training is first to teach each generation how the other generation thinks. Then we create a mentoring space. See, you want to take a senior person in the workspace, a leader, who has the experience and knowledge of the organization, and say, hey, listen, I want you to mentor this junior. But then this junior employee can also share new knowledge they've gained over the years, technology. I know if you're like me, it's the user, the junior people that's teaching me how to use my phone.
Right.
Right? And so then you get a cross-reference of training to enhance both employees. Yeah. Because we never want to get stuck in the old ways. One company I always bring up that failed to meet the challenge of change was Kodak, one of the leading film industries in cameras and film. But they refuse to even think about digital. Now you don't even hear about them anymore.
Yeah.
And so a lot of cities, a lot of companies and organizations are starting to understand if they don't take and start moving forward and adjusting, they can see a great loss.
Blue Force Mobile Training Team is online. People can find you there. I also,
Yes.
in the last minute, I want to give you a chance to just give a shout out to the Big Brothers, Big Sisters in Northwest Ohio.
Oh yes, that's my philanthropy project. I came on 4 years ago to help out. It's only been a 90-day deal to volunteer, and I've been there 4 years and 8 months.
Yeah.
And that's how I'm helping the workforce. Also is taking our youth outside of mentoring, we expanded to leadership development, where we're teaching the 4 pillars, which you mentioned earlier.
Yeah.
And we're starting to build leaders at a young age.
Awesome. And they're responding, I'm sure.
Yes, yes.
Absolutely.
Great.
Awesome.
Thank you,
Good to
Jack.
see you, Doctor.
Thank you.
We
Always great
appreciate the
seeing you.
time. Always good.
Yes.
We'll be right back. We'll wrap things up for this week right after this. Welcome back. As a reminder, each and every week, if you missed any part of our discussion, Leading Edge is on the WTOL 11 YouTube page. You can check it out there. Some great past episodes. And of course, our guests, we appreciate them each and every week. Also, check out Spotify and Apple where they have podcasts, because Leading Edge is also a podcast. So Alan Lancz and also Dr. Marvin Whitfield, we appreciate their participation today. We appreciate you each and every week. We hope to see you next time here on Leading Edge. I'm Jeff Smith. Have a great one. We'll see you next time.